Hello, good morning. Welcome back to the channel, guys. I just want to take the opportunity, guys, to thank the guys that joined my Patreon over the weekend. The Patreon is what keeps the channel on the air, is what keep the lights on to bring things back. So if you want to support the channel and you like the content you're getting, a small way you can do that is to join our Patreon for only $5 a month. You will be helping us out by keeping the show going. Anyway, guys, we're gonna get to Jim Cramer and Jeff Marks from the CNBC Investment Club, and we're gonna take some advice from them about what the stock market is doing today. And I'll definitely get back with you and tell you what I think and some of the moves that the club has made. So let's just go to the
Everything opened
investment
up
club.
and then everything opened down. Now we see the mighty Dow, as our partner Ben Stoto talks about, making a comeback. Jeff, I've got to tell you, it is amazing how powerful one analyst can be. This market was looking up, following up from Europe, even after Lagarde said that she might want 350 basis point hikes this week. And then we got a piece from Morgan Stanley by a noted bear, Mike Wilson, who said his trading call to buy is over and that we could go down to 3,000. This, and he invoked 2008. The power of this man needs to be explained to our viewers.
Well, look, he's been pretty spot on about the markets this year. So whenever he writes something, people are going to listen. And what's interesting about his note is that he's saying inflation may have peaked already, rates may have peaked, and that was the principal fear of the market for the last, call it, 11 months.
Right.
But now he's saying his fear is earnings growth, a recession, and if earnings go down next year, like what he anticipates, if it is some type of 2008 level, then of course stocks will follow earnings to the downside.
The difficulty I have with the negative thesis is that this morning David Kostin says that the industrials also could have a bad time. Now, I look at the makeup of things. I never look at these broad rubrics.
Yeah.
And I see Caterpillar looks like an up year because of infrastructure, Deere up year because of agriculture. I see there's possibly an up year for the rails because some of their cargoes are coming back. I struggle over the negative thesis because aerospace has been so delayed. Now there's a lot of aerospace. So I come back and say that if you look at the actuals that make up the industrials, it would be wrong to regard them. They have a lot of big cyclical and secular growth things. The infrastructure bills, they're just plowing money toward these guys. So I want to disagree with both Wilson and Costin and say the industrials are the place to be. Then secondarily, and we're going to talk about Lilly in a moment, secondarily, I want to be in pharma, and I would say, non-discretionary. But Jeff, what was amazing to me, and when I went over with my friends this weekend, a lot of wealthy friends I've met, we're just not getting the negative thesis. We're just getting a thesis that like negative on Bitcoin. That's it.
Yeah, it is quite interesting. We do have the S&P. It looks like it is fighting back a little bit today. We do have an oversold market finally, so that's one thing going into our. But
we do have Micron this week. I do think that Micron is still part of the inventory problem. Inventories in semis, AMD is a problem. I did think that we're going to get to Craig Jelinek for a second from Costco, but he talked about gaming being strong. So you've got this yin yang going on between gaming, which was terrible, PCs, which were horrible, and the companies that make the semis trying so badly to get through the inventory. And I think that the reason why NASDAQ's down is inventory. The reason why the Dow is up because of some of the theses I just mentioned. It's very hard to take Caterpillar down. They have way too much business from federal government to really take that down.
One of our newer names, Emerson Electric. I checked before the show that stock was trading higher this morning as well. I believe Honeywell too.
Yes,
so
Honeywell
it all kind of fits in the same.
Yeah. Now, what's interesting, we need to make a very contrary. Wow.
Even
so
after
good.
a big run,
I would still buy some more of that for newer investors who just joined the club, even since the call last week. This is one that's a restructuring story. It could be a multi-year story. I think it is. I don't think it's too late. Talking about something that's not too late, but some people might think we're too early. We bought some Amazon this week.
Yeah. It's down about 50% this year, so it's been cut in half. Interesting research note today from Atlantic Equities. They say the downward earnings revision cycle could be nearing an end thanks to conservative expectations for e-com growth, opportunities to expand margins at AWS. Hopefully, those margins stabilize. What we've been talking about over the last couple of months with Amazon is that their expense base is way too high.
Way too high.
But they do have opportunities to either grow into their overbuilt warehouse space next year, or lay off a ton of people, which could perhaps happen after the holiday season.
I think it'll be after the holiday season. Now, don't forget their advertising business is taking a hit, like everybody's advertising business, and that had been a nice growth story. Amazon Web Services had to deal with the fact that Google Cloud's doing a little bit better, but I still think they're very competitive. What worries me the most about Amazon is its FANG.
Yeah.
And FANG is as a unit going down, and I think that that's taking everything down. I think Amazon can fight that tide if we get the rationalization that we need of the workforce.
Right.
Which is, when I had lunch with Andy Jassy. I mean, when he came into town, look, he's never going to give me anything that's,
sure.
But the general notion was, I mean, come on. I mean, everybody knows the negatives.
But
everybody knows the negatives.
That's why it was a small buy. If it goes down further, we have plenty of room to add. It's not as large of a position as it was, call it 2 years ago, during when it was ripping during the pandemic.
Some good sales, part of that whole effort that we did to sell the expensive ones. Now, speaking of expensive.
All right, guys. Just want to come back here and give a little insight, as if you've been following me and if you've been following on Patreon, you know we bought Emerson Electric. We bought it around the 94. As Cramer just said, it is not too late to buy some Emerson Electric. The club just bought it. And the reason why I'm just giving this information is that the guys on my Patreon do get the information as soon as it come out. So it takes a while before I come out here with the information. But you can still get in with Emerson Electric. If you want to get into that stock, it's not too late to buy Emerson Electric. Amazon being down. There are a lot of people that's still in the red. So this is an opportunity for Amazon. As I said before, you want to dollar cost average. And when I say dollar cost average, I mean that if you're going to buy 25 shares of Amazon, you want to buy 10 right now and kind of wait and see if it's going to fall down. If it goes down below that, then you could buy, another 5 or 10 shares. That's the best way to do it. But the two stocks that I'm talking about today is Emerson Electric. It was a club stock, a new initiation in the club, and Amazon, guys. So continue looking at these stocks. Also look at oil with the dividend, guys. Still like Coterra and PXD. PXD is a little bit on the expensive side. If it doesn't have a very large budget, you could buy Coterra. It's like $24 per share. You still have PXD, Pioneer Natural Resources. They're giving the highest dividend out there in the S&P. So, guys, consider looking at these stocks. Consider looking at your portfolio and getting ready to make some buys, because I do believe that 2003 would be a better year for stocks. Anyway, guys, if you're enjoying the content, please don't forget to comment and like. Please subscribe to our channel, where we will give you a couple of stocks that the club is buying every day, guys. So thank you for watching the video. Don't forget to comment and subscribe to the channel.